everyone, John Henry here, slingshotfutures.com, and welcome to the daily futures market outlook for our Big Six, where we take a look at the major markets that we trade to formulate an attack method for tomorrow's price action as best we can with what the information that the market's giving us. Now, there's a lot of different things going on today, and talk about a breath of fresh air to see, once again, another day of pretty good volatility. I'm loving these days of volatility. Just keep them coming, market. Just keep them coming. Before we jump on into the chart, so of course, make sure to swing on over to slingshotfutures.com, scroll down, and click on the Join the Daily Outlook newsletter. That's going to add you to our email list so you know every single time one of these videos comes out, and you'll never miss a beat. Along with the newsletter, which is obviously in there, which what you're watching right now, we also talk about different stocks and different statistics and things to keep an eye on as well. So very good newsletter to get your hands on. Along with that, at the bottom of the page, we also have the market psychology videos we do every single day, where we break down one specific market and rip it apart psychologically speaking to understand why it's moving. And we also have our live trade room morning prep levels, which we post every morning before the trading day. If you haven't done so already, make sure to click on the live trade room subscription and trial information. You can sign up for a one-day trial to the live trade room. If you really like it, you can subscribe to it so you can join in as many times as you want. And of course, VIP members have this rolled in as a whole package, so you never have to worry about paying anything ever again. Now, the overall movement that we have here on the bund, relatively good upward momentum that we had to kick the day off. Gap higher above yesterday's close, never came back and filled it, so that 162.16 is a big magnet for the market to want to come back to at some point to try to fill. But they ran away from it. They had a pretty big run higher here, beautiful momentum to the upside, and as soon as we ran into last month's high, we got a little bit sidewalled here and slammed right back down to where that spike kind of started, right back down to the lows at 162.33 or so. Now, that did form a little bit of a channel to the downside, and with that channel, we do have a double break. And very frequently, whenever you get those double breaks underneath the channel, a lot of times what they'll do is go sideways and try to break out the opposite side. So we have the opposite side of the channel right here, which is the main objective for now, but we do have the sellers that at least are going to likely give it one more shot to the downside, given how bearish this fall off the highs was. Not to mention the fact that we have an unfilled gap, and there are some other levels below us that could easily give us a little bit of magnetism to the downside. What I would really like to see here is the market to kind of grind a little bit, for a while, maybe into the overnight session, pop above the highs, especially a trap above that prior high, and then dip right back down to finish off that move lower. And that would be a trap anywhere really above those prior highs, the highest point being 162.45, but it wouldn't necessarily be a surprise to see them pop up a little bit further. You have a swing low here, lots of things that they may try to get into, but around, 45 to 50 is the area of interest. So looking for selling pressure initially to drive the market down, but in the short term, you may be able to find some long scalps to get the move going up to that point first. Over on the euro, pretty good momentum here to the upside after the bears kind of gave up. We had a lot of bearish momentum. Range start to the day. We had a big gap that formed at 71.01. It did end up filling. It filled early in the morning, came back, tested it again, came back, tested it again. Maybe you're noticing a little bit of a trend here. Obvious level of resistance at that gap fill, 71.01, up to 71.37. That whole area is a big area of possible resistance. Now, once we broke out of that range, we had a nice push down, good pullback, very nice looking pullback, and then one more big dip lower, and then completely reversed. The sellers just disappeared. So that overall movement to the downside was completely taken back. We had a big move up, a pullback, the buyers held it, shoved it up to another new high. Obviously, something is shifting gears here. So instead of looking for a continual sell move to try to keep pushing the market down when it obviously doesn't want to, buyers wait for the pullback to an area of support and pop the market right back up to another high. So with this continuation to the upside, we have a couple things to keep our eyes on. There is a possibility of a measured move. We have that leg from A to B, up to C to D, and you'll notice they kind of fell short a little bit right here, but if we move that just a little further forward now to the most recent leg higher, they are right on top of that level. So right in this area, not only is this an area of resistance, which has proven itself multiple times, but it's also an area where a lot of buyers are going to be taking profit off of the table, and that causes a lot of bouncing. So because of all that bouncing, all of that profit taking, what I would really like to see here is a pullback. I want the buyers to get out of the market, get their targets filled, get out of the way, let the market pull back to an area that makes sense. 69.80 would be a beautiful area where we've seen a lot of back and forth already. I would love to see them pull back into that zone to buy it and shove the market back up and see if they can break above this. Chances are they won't be able to. If they do, it might be short-lived, but overall, still looking to be a buyer, but preferably at a better price. Over on gold, mostly range-bound movement, but kind of trending ranges, if you will. We started the day off with a very nice gap. They missed that gap fill at 55.4 and a monstrous bull candle to kick the session off. That led into a rally higher, pullback, another rally higher, pullback, another rally higher. We have our 3-push wedge top formation, drop back down to a new low aggressively, and now this is where sellers are likely going to at least try to get that second leg in a breach of that 56. Not to mention the unfilled gap at 55.4, it could be a magnet to shove the market down. At the moment, we are getting a little bit of a wedge, so we have to be careful here. And along with that wedge, it's pretty obvious this zone between 59.4 to 60.1 is an area of support and resistance. And the low side, pretty obvious here as well, 57.2 down to 56. We're stuck in a range. So because of the range and the overall bearish sentiment now that we've cycled to a new low, we're looking to sell, but preferably somewhere up in the 59.4 to 60.1 area before we start driving the market back down. It's not to say that you can't buy low. If you do get a dip lower, you definitely will be able to buy, but you have a bearish market. So buying too early could be disastrous. You may want to wait until we get at least a little bit of a breakdown first, maybe a head fake, and then shove the market right back up from that point. So play it a little bit guarded on buying the lows, much better off selling the highs to finish off that gap. On the bonds, we've zoomed out to a 10-minute chart now because it's just been so slow. Now, I say that, disregard this part right here, right? Just ignore that. But it has been an abysmally slow market. I've got a record now with the bonds. It was the Ultra bonds, took 3.5 hours to fill a 6-tick target. So definitely a slow-moving market, right? So because of that, we're zooming out a little ways here, taking in a 10-minute chart instead, just to kind of get things a little bit speedier, I suppose, at least in terms of candle formation. Definitely a slow one, though. Looking for buyers to want to step up. This is the last time after that monstrous rally higher that the buyers slammed into the market, revisited the highs, went range-bound for a little while, tapped the highs again, and fell off. That basically tells us that the buyers want a better price. They're not interested in buying way up here, and that's apparent given this fall from highs. So given that fact, we have major support at 151, floating right around 151.19, as well as a little bit higher up at 21 and 24. And that's the major zone where buyers are likely going to start coming in, scaling in, and then shoving the market back up for a possible objective back towards the highs. At the very least, I would look for them to bounce up to retest last month's high, which is where we've had all of this trouble. And that's going to be at 152.03. So buying it around this area to push the market up to 150.03, 152.03. That is, and then kind of seeing what they want to do from there. You may be able to get a little more leg to the upside to finish off to a new high, but at least up to that prior month's high. Over on crude, we had a beautiful run to the upside, phenomenal bullishness here, and really just not letting off the gas pedal. We're getting a little bit of a wedge at the end of the day, and very frequently when this happens, the market is either going to do one of two things: break out and not look back and just keep going until tomorrow morning, or we get a pullback down into major support, and that would be between 50.87 down to 50.80, and then shove the market right back up to a new high. So there are two different camps of traders that are going to take this type of trade. They're going to be the traders who just buy the market right now and say, you know what, there's a good chance that this just breaks higher, doesn't get the pullback down to 87 or 80, and just keeps running. I want to be along with that. Might be better for an overnight options trade rather than the futures, but I'm looking for a pullback. I want to buy at a better price, and I'm not really willing to buy up here hoping that it goes higher. Buying high, hoping for higher, not the best trading plan in the world, unless it's a strong trend, which this one is, and some traders will take that. But I'm looking for a pullback between 50.87 down to 80, maybe even a little bit lower, to then push the market back up towards the highs from the overnight session. On the S&P, very range-bound here. Nice bearish bias initially, but quickly reversed back in the opposite direction for a nice bullish bias now. We did run into a little bit of problem here at the highs. Got a little bit of a ceiling at 23.56 and a quarter. We also have last month resistance at 57.5. So there's a lot of stuff in the way for the buyers to continue this up. It looks really nice and strong, but we're not really getting very deep pullbacks, and we're not really getting new highs. If we were getting shallow pullbacks, not testing the low of the channel, but they were still still pushing up to the highs of the channel, that would show an immense amount of bullishness. They're buying so aggressively, they're not even letting it come back to the channel lows. In this case, though, they're buying aggressively, but they're also exiting aggressively. And that shows us that we're probably more gearing to go into a range. So this breakout to the upside, I don't necessarily believe it. I would honestly be looking for a shorting opportunity to sell either at the highs on a retest or around this area now scaling in to drive the market back down, where we can then look to buy it right back up again. Again, range-bound movement. We all know what to do there. Buy low, sell high, stay out of the middle. And right now we're high. There might be a chance to find some selling up here. So that's going to do it for the outlook. Tomorrow, we do actually have some pretty good news. I was actually kind of surprised. Today, we didn't have many announcements, and the announcements that we did have weren't even for the U.S. We still had pretty good movement. Now, tomorrow, we have a decent amount of news. The first one being at 4:30 out of the UK, services PMI, forecasted at 53.5. Previous was 53.3. Then we start going into the US session. We've got the ADP non-farm employment change, forecasted at 187,000 versus a previous 298,000. That's at 8:15 tomorrow morning, Eastern time, of course. 10 o'clock Eastern, we have ISM non-manufacturing PMI, 57 even is the forecast. Previous is 57.6. And then we go into the afternoon session with 1400 Eastern, the FOMC meeting minutes. That is a big one, ladies and gentlemen. Do not trade into the 1400 news tomorrow, okay? FOMC meeting minutes can be a wild ride, and if you're not used to it, it can definitely throw you off a little bit. And then, of course, for crude oil specifically, we have the inventories tomorrow. Forecast at the moment is a negative 0.435 million. The previous was 0.867 million. So I have to kind of see what happens here. And we have the API numbers in about 10 minutes as well. So that's going to do it for this one. As we always say, make a plan, trade the plan, follow those rules, and you'll be A-okay. Until next time, have a good one.